Welcome to IRAQI Dinar News, where you receive real and authentic updates about the IRAQI Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today's discussion centers around a topic that continues to circulate heavily within the dinar community: the idea of so-called redemption centers versus traditional banks. The statement we're analyzing suggests that the entire redemption center theory appears questionable and that investors should strongly lean toward established banks rather than unofficial redemption locations. This is an important subject because misinformation, especially in speculative currency environments, can create confusion, unrealistic expectations, and in some cases financial harm. Let's begin by clarifying what this debate is about. Within certain online forums and private groups, there have been ongoing claims that when or if there is a significant adjustment to the IRAQI dinar's exchange rate, special redemption centers would handle exchanges at exclusive rates separate from traditional banking institutions. These centers are often described as private facilities that would offer higher than market exchange rates under confidential arrangements. However, there has been no official confirmation from the Central Bank of Iraq, the Iraqi government, or any recognized international financial authority supporting the existence of such facilities. From a financial systems perspective, this is a critical point. Exchange rate adjustments, whether through revaluation, redenomination, or managed float transitions, are implemented through central banks and commercial banking infrastructure. In Iraq's case, monetary policy decisions are governed by the Central Bank of Iraq, and any change in the official exchange rate would flow through licensed banking channels. This includes domestic Iraqi banks and international correspondent banks connected to global financial networks such as WIFT. There is no historical precedent in modern monetary systems where a country's currency revaluation is executed through secret, independent redemption facilities outside the regulated banking sector. When analyzing this from a macroeconomic standpoint, we need to consider how exchange rate mechanisms actually function. If Iraq were to adjust its exchange rate, whether gradually or suddenly, that rate would be published through official channels and reflected in foreign exchange markets. Commercial banks, currency exchanges, and international financial institutions would update their systems accordingly. That is how currencies transition in today's integrated global financial system. There is transparency, regulation, and institutional oversight involved. The idea of redemption centers often appeals to emotion rather than economic structure. It suggests exclusivity, limited access, and preferential treatment. But currency exchange is fundamentally a regulated banking activity. Anti-money laundering laws, know your customer requirements, and international compliance frameworks apply to all currency transactions. Any large-scale currency exchange would require documentation, verification, and reporting under financial regulations. These safeguards are part of global banking norms, not optional components. For IRAQI dinar followers, this distinction matters greatly. Believing in unofficial redemption centers can lead individuals to ignore legitimate banking procedures or, worse, expose themselves to scams. Historically, in speculative currency communities, bad actors have used the promise of private exchange opportunities to collect fees, sell access to secret groups, or request personal financial information. That is where real financial risk emerges, not from the currency itself, but from misinformation and exploitation. Now let's take a balanced view. It is understandable why such theories gain traction. The IRAQI dinar has been a long-term speculative interest for many investors, particularly outside Iraq. Over the years, discussions around exchange rate reform, monetary restructuring, and integration into global financial systems have created anticipation. However, anticipation should not replace financial literacy. The Iraqi monetary system operates within a framework that includes the International Monetary Fund, correspondent banking relationships, and international compliance standards. Any major shift in the dinar's valuation would necessarily involve official banking institutions. In the short term, what does this mean for dinar holders? It means that if there were to be any official exchange rate change, the most logical and secure channel would be licensed banks. Investors should ensure they understand how foreign currency exchange works in their own country. Not all banks deal in exotic currencies. Some may require advance notice. Others may route the transaction through specialized foreign exchange departments. These are practical considerations grounded in reality. It also means that investors should avoid making decisions based on rumors of private appointments, secret rates, or urgent timelines. Financial markets do not operate on secrecy for retail currency exchange. While central banks may prepare policy adjustments confidentially before announcement, once implemented, the exchange rate becomes public information. In the long term, the larger issue for Iraq's economy is structural reform. Sustainable currency strength depends on diversified revenue streams, fiscal discipline, foreign reserve stability, and economic productivity. Iraq's economy remains heavily oil dependent. Any meaningful strengthening of the dinar would require improvements in non-oil sectors, banking modernization, foreign investment confidence, and political stability. Exchange rate reform is not a standalone event. It is part of a broader macroeconomic ecosystem. From an institutional standpoint, Iraq has taken steps in recent years toward financial modernization, digital payment systems, and compliance alignment. These developments are far more significant indicators of economic evolution than rumors about redemption facilities. A stable and credible banking system is essential for currency confidence. If Iraq aims to deepen integration into the global financial system, strengthening banks, not bypassing them, would be the logical path. Another important aspect to consider is liquidity management. If a currency's value changes significantly, banks must manage inflows and outflows, ensure sufficient reserves, and coordinate with central bank policy. Redemption centers operating outside that framework would disrupt monetary control. No central bank seeking stability would delegate that responsibility to unregulated private venues. For dinar followers watching this channel, the key takeaway is to remain grounded in economic fundamentals. Currency investments carry risk. Exchange rate policy is influenced by fiscal health, inflation trends, geopolitical stability, trade balances, and reserve adequacy. It is not determined by private exchange events or exclusive redemption windows. Let's also address expectations. Some investors hope for dramatic overnight shifts. While currency adjustments can happen quickly, especially in fixed or managed systems, they are rarely detached from economic conditions. Even if Iraq were to adjust its official rate, the practical experience for holders would still involve standard banking procedures, verification, documentation, exchange spreads, and possibly tax implications depending on local regulations. That brings us to compliance. Any large foreign currency exchange may be reportable under financial laws in various jurisdictions. Investors should consult qualified financial professionals to understand reporting requirements. This reinforces why banks, not unofficial centers, are the appropriate venue. Banks operate within regulatory frameworks designed to protect both the institution and the customer. Now let's examine the psychological dimension. In speculative communities, narratives of exclusivity can create urgency. Urgency can lead to rushed decisions. Sound financial strategy, however, emphasizes patience, documentation, and verification. If and when any official exchange rate change occurs, there will be time for regulated institutions to update systems and process transactions. Currency markets do not vanish overnight. Looking ahead, Iraq's long-term monetary stability depends on reforms in governance, transparency, anti-corruption efforts, and diversification of the economy. Strengthening domestic banks and increasing public confidence in financial institutions are central to that process. If the banking sector becomes more robust and technologically advanced, it supports currency credibility. That is a structural pathway, not a secret one. For short-term watchers, the absence of evidence supporting redemption centers should be a cautionary signal. In financial analysis, absence of official confirmation matters. Central banks communicate policy decisions formally. Governments publish decrees. Financial institutions update rates publicly. Extraordinary claims require verifiable documentation, not anonymous sources. In conclusion, leaning toward established banks over so-called redemption centers is consistent with how modern monetary systems function. It aligns with regulatory norms, historical precedent, and institutional logic. For Iraqi dinar followers, the prudent approach is to stay informed through credible sources, understand the mechanics of foreign exchange, and avoid narratives that promise exclusivity without evidence. As developments continue in Iraq's economic reforms and banking modernization, we will analyze them carefully and objectively. Sustainable currency progress, if it comes, will be tied to economic fundamentals and institutional credibility, not secret facilities. If you found this analysis helpful, make sure to subscribe to the channel for responsible and factual Iraqi dinar updates. Remember, this content is for informational purposes only and should not be considered financial advice. Always conduct your own research and consult with qualified financial professionals before making any investment decisions.